Let this sink in for a moment. The lack of financial education cost Americans $450 billion in 2021. 78% of American homeowners are living paycheck to paycheck. And right now, most American homeowners are equity rich and cash poor. That's another word for broke. The media isn't helping you, schools aren't helping you, and the government for sure isn't going to save you. As a top 1% mortgage professional and seasoned investor, I cannot sit around and watch these life-changing skills that I've learned outside of traditional schooling be unused, untaught, and thrown in the trash can. So until these statistics change, I'll be here every single week, preaching and teaching personal and professional finance, information that you can use in your life, however that looks, whether you are 16 or 60. Hey friends, welcome back to another episode of my Happy Homeowner Podcast. My name is Dan Keller. If you don't know me, I have an incredible guest today. I've got Dan Gunderson. He's one of the top real estate agents in Everett, Washington. And today we're going to put a bookend on a 3-part series on Everett, Washington. So previous guest was our mayor. If you haven't listened to that episode, I'd encourage you to go back because that's going to tee up what Dan's talking about today, and that's real estate. So before we get started and I introduce Dan, I created this podcast about 4 years ago for my clients and also for all of our new clients that are coming in and relocating to Snohomish County and King County so they could learn a little bit more about these communities, and then I can connect them to incredible resources in each one of these great communities and neighborhoods. And so today, you're going to get to hear from one of the best. Dan's been in real estate for a long time. We'll learn more about that here in a minute, but he's done it at a high level, and he's got a great team that knows a lot of the ins and outs of the Everett market, and then what's happening in Everett, why so many people want to relocate here. So, Dan, I want to welcome you. It's going to be fun spending the next 15 minutes with you.
Thanks, Dan. Thanks for having me today.
Yeah, so I always like to start off anytime I have a guest, like, how did our paths cross? So you're in real estate, I'm in finance. How did you get into real estate and when?
That's a question I get asked a lot, Dan. It really wasn't by design. I grew up in Everett, product of the Everett Public Schools, K through 12, and proud of that. I've always really felt close to Everett, and I just think it's a very generous town, and there's a lot to like about Everett. Went to college at University of Washington, studied business management and building construction. Didn't really know where that was going to lead me. I think I saw myself maybe more in a commercial arena, but I ended up getting my real estate license in 1997 and went to work at Windermere, and I've been there ever since.
Yeah, you have. Yep. When I think of you, I think of Windermere. It's funny. They should be paying you a ton right now for the billboard that you provided them. But great company, great local real estate company. They've got a great reputation. So 1997 to current, a lot has happened. What's in as you look back on, your tenure selling real estate, specifically in the greater Everett areas, what's something that's really stood out to you about Everett, whether it's growth, development, something that when you think of Everett that jumps out at you?
Well, originally I probably would have answered that question. It's one of the few cities in the really Tri-County region that's built overlooking Puget Sound. Mm-hmm. Our downtown, views from every building, and that really runs through our neighborhoods as well. So I've always thought that Everett was maybe underappreciated for all the beautiful views and scenery. Then you jump forward to the recent years with the Painfield Airport, with Washington State University partnering with Everett Community College, the riverfront, what's happening at Waterfront Place. I'm not sure there's a more exciting place to want to live right now.
Right. Yeah, I love that. So I had a feeling you were going to talk about that. That's something that if you go back and watch our previous episode where we had Mayor Cassie Franklin on talking about what that has done to the greater Everett communities and stuff. And so as we talk about communities, you can't not talk about real estate, right? And probably the number one question I'm sure that you get asked relative to real estate in this market that we're in. So if you're watching this down the road, it's September of 2025. Right now in Everett, are we in a buyer or seller's market? Because we've been in one of those markets for quite a long time right now, and I know things have changed. So let's talk about what kind of a market we're in right now, buyer or seller, and then let's define what that means.
Well, I get that question all the time. And you might get different answers if you look at it nationally compared to locally, but we really feel that real estate really is local. Okay. At Windermere, we look at that formula of buyer's market, balanced market, seller's market, looking at month's supply of inventory.
Okay.
And what that really means is if you were to stop listing homes today, no new inventory, how long would it take to sell the existing inventory? And coincidentally, right now, we are right about 2 months.
Okay.
So we are right, and how we measure that is 0 to 2 months, you'd be in a seller's market. 3 and 4 months of supply of inventory, you'd be in a balanced market, and you get up in 4, 5, and 6 months of supply of inventory, you'd be in a buyer's market. So we're right on the edge of that long-time seller's market that was so robust 3 and 4 years ago. And I think we are going to settle into what would be a balanced market here.
Okay, we're going to settle into more of a balanced market. Now, it hasn't happened yet, but the Fed's going to kind of meet up and talk here in the next week or so. We have indications that the Fed is going to drop the Fed rate. We all know that mortgage rates don't work directly with the Fed rate, but move indirectly with the Fed rate increases or decreases. What are your thoughts on lowering or falling mortgage rates on the existing Everett housing market? You think that's going to cause more sellers to list, which could flood the market with inventory, or do you think that's going to be a plus for all the buyers that might be on the sidelines right now?
I think more of the latter. We do have more inventory right now than we had a year ago. The number of sales and pending sales is very in line with last year, but we have more inventory, and I think if that interest rate can come down even a quarter point, half point, there's some magic number that's going to get these buyers not just off the fence if they're on the fence, but it might give them enough buying power to enter the arena to be able to purchase.
Yeah, which would be a good thing. I've read a lot of national statistics on buyers right now, and the National Association of Realtors have also published information on this, that for every 1% drop in rates, approximately 4 million new home buyers qualify now that didn't qualify at 7.25 as they would at 6.25. So we're going to continue to keep an eye on that and hope and push for a little bit, just a little drop. We come out of 3.5 years of 7 and 8% rates. So it can take its toll on any market. So speaking of the Everett market and the health of it, buyers or sellers market, I love your explanation. You mentioned inventory, like months of inventory. To the consumer watching this, I want to break that down even further and talk about days on market. Okay, so if you have a buyer right now and they're looking at a home and that home has been on the market for a certain amount of days, that might indicate that you could potentially negotiate a deal. On the flip side, if you have a seller and their house has been on the market for a certain amount of days, that could be a potential indicator that we might need to have a price reduction conversation. So let's talk about current days on market. And this is median, you guys. Everett's kind of a large city. You've got water view. You've got, $2-3 million homes, possibly, maybe a little bit more, maybe a little bit less. And you've got some condos in the $200,000 to $300,000 range. So we're going to kind of split it right down the middle. But average days on market right now, what are you guys looking at, or what are you seeing in Everett?
Overall, and you're right, the numbers, averages, and medians can get skewed when you're lumping all the properties together. Right. As a general rule right now, I think 30 days, right around 30 days would be the average time on market. It's about 15 days. It's up 15 days from a year ago. Okay. We're 2 weeks longer on market on average right now. Okay,
cool. Speaking of, so days on market, let's take it to another level and talk about list price to sales price. So are you a year ago, we were seeing it maybe 101, maybe a little above list price. What are we seeing today, and what were we seeing a year ago?
Well, and that's a really good question, because when you do list a house, it's really important. It always has been, but it's really important right now to find that sweet spot for market value. If you overprice it, you will sit, and buyers are very comfortable waiting you out. Yep. And you don't also want to underprice it like we could do even strategically years ago, because you can't guarantee you're going to get that second buyer to help escalate that price to market value. So pricing it's the hardest thing right now, because the data that we use we can find data to support a list price, but the buyer still might not support that.
Right.
So it's challenging. I'm not sure I answered your question ultimately there, because there's a lot to talk about when it comes to list price. And those numbers also get skewed because the houses that price their house correctly can still sell in a week right now.
Right.
It's happening.
Right.
But if you miss it, you could be talking to me 45 days from now, Dan, why isn't our house sold?
Yeah.
What do we have to do to correct this?
Yeah, and as a real estate professional, and I get this on the mortgage lending side of it, they'll come to me and say, hey, I want a deal. And I'm like, well, define what deal means. A lot of consumers will think the deal is just if it's listed at 800, getting it for 775 or 750. The deal might be just winning your offer in many cases, but to define a deal, you want to work with a pro like Dan and his team where they'll actually look at, if you're working with a buyer, for example, that the house has been on the market for 28 days. Well, in the back of Dan's mind, he knows that the average days on market is right around 30. So, hey, look, it hasn't gone pending in 30 days. So, hey, there may be some wiggle room here. I always tell my clients this too. Don't lose out on the home you love or your next home, a dream home, trying to quote unquote get a deal. If this is the home and it meets the criteria, listen to your agent, write it up and win it. The market is going to continue to improve. And that brings me to one of my last questions on the market. Let's talk about the next 1 to 3 to 5 years in Everett. We've been in a high interest rate market over the last few years and homes have still gone up in value. So assuming that the Fed is correct, that the government's correct, they're starting to buy more mortgage bonds and that'll artificially cause rates to drop a little. The Fed's going to drop the Fed rate. That could cause rates to drop a little bit more. Assuming rates drop a little, we get a little easing there. Do you see the Everett housing market to continue to go up in value like it has in the past?
I do. I think if rates go down, I think it's going to light a fire under our market. And it's not really just myself that thinks that. Our chief economist believes that. Many people throughout Windermere and the other brokerages in town really believe that Everett's such an exciting place to invest in and live in. It really is, I think, interest rate related, why our market's a little bit sluggish right now.
So big upside in Everett. You buy a home, it's not going to go down in value. We got a great economy here. We've got a lot of really great things happening. We don't have the time today to talk about it. That's why I brought in two incredible guests before Dan that are all about commerce here in Everett. The mayor talking about all the fun things. I'm a big baseball guy, so there's some really exciting news with the stadium that's going to be developed here in the coming years. But I want to kind of put a button on the economics of Everett, okay? So if you're listening to this and you're like, hey, this sounds cool. I've listened to the two previous podcasts. Like, Everett's a place that I'd like to learn more about. Number one, you're going to want to reach out to Dan and his team. Number two, you're going to need to understand financially what it looks like to live here. So what is kind of the median, and I have some numbers for you, but I want to explain to the listeners, what's kind of like the median sales price right now in Greater Everett?
In August, it was just over $700,000.
Okay.
Was the median sale price.
Yeah.
Call it 705.
So 705, splitting it right down the middle. You can go higher, you can go lower, but the most common sales price right around $700,000. So I'll tell you, in King County and Snohomish County, right now in 2025, the average down payment on all homes, now this isn't just first-time home buyers, is 7%. So I just simply took your number, took 7% down. I added some property tax estimates, insurance estimates, private mortgage insurance estimates, and I also assumed that you're not debt-free. You might have some monthly revolving debt of about $500. So I reverse engineered that. If you wanted to buy a home in Everett for approximately $700,000 with 7% down, you're going to need a total household income of approximately $12,000 a month. Now that's total household income. I don't care how we arrive at it, but you're gonna need about $12,000 a month to qualify for that mortgage. That's approximately $150,000 a year salary or income. So that's kind of the median home buyer that's moving and living to Everett right now. I always give this disclaimer. I am a licensed mortgage professional. I do need to say my number right now. My MLO number is 115349. There are a ton of other options. We have people in Everett putting down 20, 30%. We have first-time home buyers putting down as low as 0. So if you're listening to this and you'd like more information on what this might look like, Dan's information is down below in the description. Mine is as well. We'd love to have an off-the-record conversation with you to help you better understand what moving to and living in Everett might look like. I always end on this. I think that I love giving our listeners some really helpful information. So whether you are thinking of buying in the next 6 months, or if you're listening and you're like, I live here in Everett and I'm thinking of selling in the next 6 months, I want to ask Dan, because he's one of the best. If someone were thinking of selling their home in the next 6 months, what's your best piece of advice? What should they be doing right now, knowing that they're going to be calling you, talking with you, and listing with you in 6 months?
Well, I think the best thing you can do in both scenarios, buying or selling, get a hold of your broker in advance. Don't wait until you're 2 weeks from making that decision, because there's a lot to discuss in terms of what you might do to your house, how you might get ready for market. Pricing, you can look at that 6 months early, get in a ballpark, and then follow the market through to when you actually are ready to go on the market. So I just think it's something that you can't start early enough.
Cool. So I heard you say get in the market with your broker so you start understanding, because that will help you build in what you're going to price that home for sale for. Okay. As far as maybe looking at the property, tuning it up, what are some things, some basic pieces of advice that you give to all your sellers in advance that they should be thinking about keeping an eye on around their house to maybe get it ready for sale?
One thing a lot of people are doing these days is having a home inspector come out well before they list, kind of get that punch list of potential maintenance items. They can tackle that. I think getting a stager in your home, even just as a consultation, to look at how you might rearrange furniture. Sometimes we use our houses how they work for us, but maybe that's not the way that they were built. Especially with the pandemic, we were using our dining rooms as offices and all that. When you put your home on the market, you really do want to have it staged professionally, even if it's with your own furniture. It's just nice to get things thinned out.
I love that. Same thing with buyers, I heard him say. So get in the market. Obviously, you want to get your budget dialed in, understand your numbers, but I encourage buyers to do the same thing. Understand the market. I tell buyers that there is the market and then there's your market. And the sooner that you can connect to the two, the more informed you'll be, the better the decision. It won't be an emotional decision. It'll be a tactical decision. It'll be an informed decision. And then the process tends to go smoother. So let's wrap with these last two questions, Dan. Biggest mistake you're seeing sellers make in this market that we've been in?
Well, I'd say two things. It's pricing too high and not having their house ready for market.
And when you say not having your house ready for the market, kind of like what you just indicated, an inspection, kind of that bullet point honey-do list.
Maybe some paint, some carpet, depends on where your needs are.
Any other things that you're seeing sellers kind of miss the mark on right now?
Well, I would say that it's not responding to the market in a timely fashion. If your house lasts on the market for more than that, roughly 28, 30 days, you need to respond if you're truly motivated to sell. It's amazing how fast you can collect market time. Yeah.
And another thing that we talked about kind of off air earlier is that, hey, if you're a seller, you have to understand that buyers are, for the first time like 10 years, they can be picky. They I've seen more of my clients back out on inspections than I've ever seen in my whole entire career. And so take that information when you're listing your home and listen to what Dan's saying in regards to that honey-do list. Listen to your agent. I always tell my clients, listen to your agent. Like if they tell you to do something and it's something that you just don't really necessarily want to do or think you need to do it, you do, because they're in the trenches and they're the ones that know. All right, last question. Biggest mistakes you're seeing buyers make in a market like this?
Not talking to someone like yourself in advance.
Okay.
Get pre-approved well before you start the process. Meet with your broker, especially if you're a first-time buyer. Go through that educational process so you really know what to expect through the home buying process.
Amen. I think knowing, like we said earlier, knowing the difference between the market and your market. When I say your market, that's your budget. That's not even really your pre-approval. That's your budget. That's your 5 to 7 year goals in that house. And sharing that with your mortgage broker and sharing that with your real estate agent, boy, they can really help negotiate better terms for you. And then we can structure financing terms that line up with those goals versus just kind of fitting in the box like a lot of banks and credit unions might do. This was awesome. I think this was a perfect cherry on top of the sundae to a 3-part series on Everett, Washington. I want to encourage you. Where can we, if we want to learn more about Everett, specifically real estate, where can we find Dan Gunderson online?
Livin425.com. That's where we are.
Livin425.com. Dan has an incredible team. I want to thank you guys for listening. If you need anything, reach out. We'll see you next time on the Happy Homeowner Podcast. Bye for now.